Hey everybody, I'm back with Opendoor Technology. The reason why, because Opendoor has earnings coming up very soon. So why not make a video about Opendoor? And I'm going to tell you exactly what I see in Opendoor, what I think what's going to happen with Opendoor in the future. And let's find out by looking at the chart and some news that I want to show you. Things are getting interesting and I hope we go higher, but we have to see. The housing market is struggling. I'm going to show you the chart for Opendoor Technology and what to expect next. It's good to be back. First thing first, I'm going to remind you, I make all my gains from looking at charts. Volume, MACD, RSI, parabolic, SAR, moving averages. I pretty much mute out the news that we see every day on the radio, the TV, because a lot of that is distraction. Charts don't lie ever. Technicals don't lie. Charts and technicals tell you when people are buying, when the smart money is getting in, when the smart money is selling. So I make all my gains from charts, and that's why I emphasize charts so much in all my videos. I look at the news a little bit, but it's not telling you everything. It's not showing you the big picture about the stock. Look at the volume. It tells you when people get in and it tells you when people get out. And you can use that for positioning yourself to make money and lessen your losses. Before we look at the chart, which is the most important thing, I want to show you that Opendoor Technology closed at $4.44, very far from the $10 mark that we looked at a long time ago. And for the past year, it's up 181%. Up $2.87, which is pretty good, right? But it's so far down from where the high was not too long ago. And their earnings for Opendoor Technology, Thursday, February 19, 2026. Time, 2 o'clock Pacific, 5 p.m. Eastern. Fourth quarter and full year 2025 financial open house. Format is going to be video live stream with question and answer, just like last time. The company is expected to report a Q4 2025 loss of approximately 0.08 to 0.12 per share, based on analyst estimates. So we don't know, but that's where they're estimating right now. And remember, this is a challenging housing market, so that's why Opendoor is struggling. While the Q3 2025 revenue missed expectations at $915 million, the company is focusing on increasing home acquisitions. Analysts are projecting a continued loss for 2026 as the company shifts toward an AI-driven lower cost model. So that's how they're trying to make their money, using AI, and which is going to lower the costs for the company. And when you can lower the costs, more revenue for Opendoor. Now here we are, the most important section of the video, Opendoor chart. Everything you see is how I left it weeks ago, months ago. I have not touched this chart since the last time I made a video. So you see these trend lines, these were drawn a long time ago. I did not draw these trend lines for this video today. These lines have been there for weeks and is pretty accurate, right? That's why charts, indicators, and drawing trend lines are so important. This is pretty accurate based on what I drew weeks ago, and it followed it. Now let me explain what you're seeing right now. These blue trend lines is what I drew weeks ago, right? So I drew this line for resistance at 798. I drew this line for support at 628. And as you can see, we traded within this area for weeks and weeks. This is the weekly chart. And then I said, if we break this 628, which we did right here around January 16th to January 23rd, it's going to go down. So if you had a position in Opendoor and you sold once it broke that trend line around January 23rd, you would have saved yourself some money, because it went from $6.28 to the current $4.44. That's why it's very important. And here's a diagonal trend line I drew weeks ago. I said, here's the high up here, and then here we go straight down in a diagonal line, and it's following it pretty much exactly, right? It had a stronger sell-off right here, so it's not touching the blue diagonal line exactly right here because it had a strong sell-off around February 6th. Now let's look at the MACD. MACD is showing lots of selling, and here's the volume, very low volume. So Opendoor is going down on little volume. The reason why the volume is not higher than what it is because investors aren't really buying it. So the volume is very low. The price is going down and no one's buying the dip. So just a little bit of volume could take Opendoor down. That's why we're seeing selling pressure on Opendoor and the price is still going down. So back to the MACD, lots of selling, no end in sight at the moment on a weekly, but we're going to check out the daily and see if we see anything different. RSI shows money is leaving Opendoor. Now let's look at the daily and see if we see anything interesting about it. Now the daily chart looks much different from the weekly. Weekly shows a downtrend of Opendoor Technology, but the daily chart is showing a little bit of support. Finally, right? The MACD on Opendoor is starting to trade sideways a little bit. It's starting to go sideways, which is good. RSI starting to go sideways, which is also good. So that means we could be at a support at the $4.28 to $4.40. So I'm going to draw a support right here at the 427, and I'm going to draw a resistance here at the 505. So that's the area that you're looking for a breakout for Opendoor. We want to hold that $4.28, and once we break that $5.05, that means that we're starting to move up again. Will it continue to go up more and more? We could see some buying before the earnings, which means there's a possibility that we may break the $5 next week. No guarantee, but it's a possibility. People may be buying, the rumor, or people could be buying Opendoor before their earnings to see what happens. And if the earnings are bad, then it's going to sell back down to the $4 area. So if we break the $5 area and go a little bit higher, maybe to the $5.80, I'd like to go to $6, but don't know. Only thing I do see is that we may break the $5, $5.05. At the most, possibly the $5.75. Don't know for sure. Earnings, if the earnings are good, it could take us up to the $6.25, maybe the $7. But it would have to be outstanding earnings to go to $7. At the most, $6.25 to $6.50 if the earnings are good. If the earnings are bad, it could take us lower, even past the 428, because they're going to have some panic selling if the earnings are real bad. If it does go below 428 from panic selling, you may have some dip buyers come in and it may go up a little bit more, but we have to see. We don't know how the earnings are going to be. So what I'm going to do, I'm going to erase the resistance and support area that we had a long time ago that I drew, and I'm going to draw some new support and resistance lines for people who are still following Opendoor Technology. So we had a 428 support, 505 resistance. If the earnings are completely bad, then we're looking for a support right here at the 360, 375 area, which is not good at all. But that's where the support is showing on the chart, 360 to 375. If the earnings are good, then we need to check for resistance, and the resistance is going to be at 683, 685, or the $8.12, $8.15 area. That's what we're looking at. And right now, we're right here, right above that 428 area. So we need to break that $5.05 early this week, right? And then let's hover in this area between $5.05 and 683. If we had good earnings, then maybe we can touch this 683. If we had bad earnings, we may go down to the 427 to the 363 area. And that's pretty much where we're mapped out for Opendoor Technology. The housing market is struggling. Can't really say, oh, Opendoor is a bad company. It just, the housing market is not doing good, and Opendoor is trying to recover. But how can you recover when the housing market is bad? When we look at Lennar, the weekly chart, Lennar is holding support right here. Like I said, once again, I did not draw this support today. This 108 support was drawn weeks and weeks ago, maybe months ago. I don't know. Could be January or December when I drew this line. And we're holding that support at the 108. Exactly where I drew it before, 108, and we held it. You see where it ducked below 108 for 1 week on January 9th, and then it came right back up, and it's been holding that 108 for the past 3 weeks, and now we're trading from 113 to 124. So Opendoor is not the only stock in the housing market doing bad. Lennar is also struggling, but it's holding a support area. Opendoor, you're seeing heavy pressured selling because, like I said, you remember, it's up a lot for that year. I think over 100%. And Lennar is more established than Opendoor. Two different companies, but both in the housing market. And Lennar, of course, have more money on hand and more established than Opendoor. Opendoor is a company trying to establish itself again, and they're trying to use AI to drive revenue, right? That's why they did a lot of firings, because they want to use AI to save money and profit more and increase their revenue and make their earnings look much, much better. So Opendoor and Lennar, you can't really compare their financials at all, but I'm just comparing the stock for the technicals and how it's trading. Lennar been going down and is holding support here. Opendoor held support here for a while, and now it's just going down, because when your sector is struggling and you're a stock trying to recover, it's going to be bad for you. It's going to be bad for you. Now, if the housing market was doing good, I would think Opendoor would be maybe in the $8 to $9, $10, maybe even more than that. But the housing recovery said it was going to be much better at the end of 2025. Then they said early 2026, and it's getting pushed back month after month. They're saying maybe early 2026. Then they said mid 2026. What's next? End of 2026? We don't know. But it keeps getting pushed back more and more and more. So that's why we have Opendoor struggling and Lennar just consolidating. It hasn't been going down much, but it's consolidating. You got big players in Lennar, so it's not going to go down too much. You got Warren Buffett in Lennar, so he's probably holding up the price as much as he can. But once again, for my honest opinion, for Opendoor to do well, we need the housing market to recover ASAP. I always let you know my honest opinion. I don't try to rosy up the situation. Oh, everything is going to do well. Everything is good. Opendoor is going to go to 100, 10 times, 100 times. I'm telling you how it is. Opendoor needs the housing market to recover as soon as possible, so the earnings can look good, the revenue can look good, and we can get back on its feet again. That's what Opendoor needs, and if it happens, we're good to go. If it doesn't happen, Opendoor is just going to keep losing money day after day. I'm going to start making some new videos very soon on what stocks to make big profit. So if you want to watch those videos, make sure you subscribe and like and comment. Take care.